Hello again, YouTube, and welcome back to the channel. In today's video, we are going to be going over the Medicare income-related monthly adjustment amount, other known as IRMAA. And this is basically whenever you get the letter that says that you're going to have a surcharge on your Medicare premiums. So the standard premium in 2022 is $170.10 a month. You can be expected to pay more depending on your income levels. So if you did get the form, which comes out typically the third or fourth week of every November for the upcoming year, then this is the form that you should be filling out. When I worked for the Social Security Administration, the letter that you get actually tells you to fill out a different form, which is a SSA-44, a request for reconsideration. That is actually the incorrect form. And the reason being is because when you get your letter, it's a proposed decision, basically giving you a heads up that, hey, we're going to be charging you this in the upcoming year, approximately 60 days or so, depending on when you get paid in January. And we're not doing that yet, but we're just letting you know that it looks like you're going to be affected by it. And a 561, an SSA 561 reconsideration form, that form is used whenever a determination has been finalized and you find it to be incorrect or you disagree with it for whatever reason. That's what the form is for. What this form, the SSA 44, is for is you're letting them know in advance that, yeah, you might have had that surge in income, but maybe your situation has changed. Okay, so that's what we're going to dive into now. Before we get any further, please make sure to, if you like the videos that we're putting out, make sure to give it a like on the channel. Please subscribe for as additional information comes out and more videos. I'm sure it will be helpful to somebody out there. And if you have any questions on something that maybe you would like covered or something about the form that you want me to address, you can go ahead and leave a comment down below, and we'll get that all squared away for you. All right, so on the this form, and you could go look it up on Google. That's where I found it. Just make sure that you're going to the website for the government there, so you got the right one, and nobody's trying to steal your information. The little locks on there too to let you know that as well. But so this is the form. It's 8 pages long. I can't stress enough, just getting into it, that there's a lot of forms out there with a lot of instructions. This form is actually pretty well organized in the kind of the terms and definitions and the evidence that you need to provide, depending on your situation. So we'll go to the top here. You always want to make sure, so when you turn this form in, it's 8 pages long, a lot of it's instructions. It's really the first 3 pages of the form that the government needs. You don't need to turn in any more than that. And then a lot of times, they'll just take your allegation, because when you sign this form, you're declaring under the penalty of perjury that the information that you're giving them is true and correct. So you're attesting to it by law. So if they insist on proof, give them the proof. But sometimes people will turn in like 100 pages of tax returns, and you don't really need to do that. Okay. All right. So on the first page, super important, you're going to put your name and your Social Security number. It should be noted that if you're a married couple, Medicare is an individual policy. So if let's say you file your taxes married and jointly, each one of you will get a separate letter about Medicare and the surcharge that you're going to have. And each one of you would be expected to fill out this form separately and sign it separately. And the reason for it is for that attestation at the bottom. There have been times in the past where I've seen a married couple like try and squeeze both of their information here and both of their Social Security numbers. It doesn't work that way. When the Social Security Administration gets your paperwork, it can only be uploaded to one record. If they wanted to make a second copy of it, that would be helpful, but I wouldn't rely on that. So what will happen is whoever's information is here, or they read first, they'll probably process it, and then they'll probably mail a rejection letter to whoever they didn't want to help, basically saying that you need to fill out the form separately. Okay, So here's the chart here, and it says if you file your taxes as, and your MAGI, which is modified adjusted gross income, is this, then this is what your Part B premium will be. And whether or not you have a drug plan for Medicare, you will still pay this surcharge for Part D. Okay, now, and what this is saying too is that in 2022, your standard Part B premium is $170.10. So if you, let's say that you fall into this first tier, you will pay, on top of the $170, you will pay an additional $68 for Part B and an additional $12.40 for Part D. So kind of first and foremost, in order for you to have your surcharge considered for reduction or removal, you have to meet two criteria. The first is a life-changing event, and the second is your income has to be reduced. If you have one and not the other, they will not accept this form, and you will be stuck with that surcharge for at least that 12-month period. It gets evaluated every year. Your current year's premiums are based off your 2 years previous tax return. So right now we're in 2022, so they would be basing whatever you paid in 2022 off of your 2020 tax return. In 2023, it's going to be based off of 2021 and so on and so forth. Okay, so that's kind of like the baseline of where they get some of this information from. Now, let's say you're in a situation where you didn't file taxes in 2020. Then they're going to go back to 2019. And it will stay that way until you file a new tax return. If you are in a situation, or until you complete this form, that letter that you get in the 3rd or 4th week of November is derived off of that. So automatically, that's what we'll say. Okay, you didn't file in 2020, so we're looking back at 2019. And let's say that you had no work, no income. If that was your situation, then you would just fill out this form and say, something must have happened where you had a reduction in income. And hopefully you had one of these life-changing events. The life-changing event could have happened at any time. It doesn't have to happen in the last 2 years. It could have happened 10 years ago, right? And maybe you had this abnormal surge in income, like you sold the house or you cashed out part of your 401k, something like that. And that's what caused it to surge, right? So as long as you have one of these that happened at any point in time, and I'll go over all of them in a minute, you'd be good to go for that life-changing event. So if you retired like 5 years ago, you're still good, and you're still going to put that same date in this box right here. So let's start with this, all right? So your handful of life-changing event, you got married, you got divorced, you had your spouse passed away, maybe you retired or you reduced your work, you have a loss of an income-producing property, and a lot of people get confused about this, a loss of pension income, or an employer settlement payment, all right? So to figure out what these are, that's where we're going to go. That's the comment I made earlier about kind of like the terms and definitions that they use here is actually very good. This is probably one of the better government forms that they put out there, okay? So marriage is pretty self-explanatory, as well as divorce and death. Work stoppage or reduction, again, clearly straightforward. If for this, sometimes people will include like a letter from their employers stating when their last day of work was, or maybe when they went from full-time to part-time. Loss of income producing property. Now, what a lot of people tend to get mixed up with this is they're under the assumption, let's say they have a rental, and maybe they're in a position where they don't have anybody that they can rent to, or they sold the property. That is not the same thing as a loss of an income-producing property. This would be like if a tornado ripped through your house and basically you had to the house was totaled, and you had insurance, then you would be required realistically to provide that proof from the insurance company that yes, the house was destroyed and you got paid out, and then now that's what's coming up on your that's what's coming up in your tax returns because you got this massive payment from the insurance company essentially. Loss of pension income. You or your spouse experience a scheduled cessation, termination, or reorganization of an employer's pension plan. So basically, let's say that you're a retired state employee, or you worked at a municipality, or maybe an employer that had their own pension system. This is essentially the pension system going under, and now you don't have a monthly check or a yearly check, however it's broken down. And then employer settlement payment. You or your spouse receive a settlement from employer or former employer because of the employer's bankruptcy or reorganization. Kind of a similar situation where this was an event that was kind of outside of your hands and it produced income for you, and now now that income's gone. Okay, so these are kind of like your definitions here, and then if you scroll down further, down to the evidence field, it will tell you what you need to produce. So let's go down to the bottom three here. Loss of income producing property. An original copy of an insurance company adjuster's statement of loss, or a letter from the state or federal government about the uncompensated loss. If the loss was due to an investment fraud or require both of the... we also require proof of conviction of the theft or some sort of court documents, essentially. Loss of pension income, a letter or statement from your pension fund administrator that explains either the reduction or the termination of your benefits, and then employer settlement, a letter from your employer stating the settlement terms of the bankruptcy court and how it affected you or your spouse. All right. So as I mentioned before, a lot of this is information and how to fill out the form. So here's what you do. Okay. So I'm Joe Schmo. I retired last year, so I'm going to do work stoppage. When did I retire? Let's say December 31st, 2021, right? And then a reduction of income, right? So I retired December 31st of 2021. That means that my income is reduced in 2022, right? Because I made all that money up until that point, okay? So this is now the new fill in the tax year in which your income was reduced. Well, it wasn't 2021 because I worked all year. It would be 2022. Now, if let's say that you retired in June, then I would say it's okay to put 2021 because that's the tax year in which once you file and that information comes over through the IRS, they're going to see, okay, you were making X amount of dollars a year. You retired in the middle of last year, and now we can see that clearly your wages are reduced. All right. So your adjusted gross income. So let's say that we're married, filing jointly, and I have 100,000, right? 100,000, yeah, 100,000. Most of the time, the tax exempt interest is going to be zero. If it's not, your CPA is going to be able to help you fill in that number of whatever that might be. And then, will your modified adjusted gross income be lower in the next year? In step 2. Okay, so in 2022. So this is kind of playing off of whatever this first date might be. So you would say, yes, or you could even put, in 2023, I'm going to maintain, the same level of income, also still filing married. And then what will end up happening is as they process that, they're going to put exactly what you put in here. Okay, what happened? I stopped working. When did it happen? It happened December 31st of 2021. Okay, what's the new income looking like? Okay, well, I went from making 300, now I'm at 100,000, or 300 as a married couple, right? So maybe both of you make 150. It was going from 300, and now it's only 100,000 for the both of you. Or if maybe your spouse is still working, it could be a little bit higher, whatever the case might be. All right, they may consider this, they may not. Then you're going to sign it, put your phone number, your zip code, all that good stuff. Right? Now, again, if you're married, each one of you needs to fill out this form, and realistically, you will fill it out exactly the same if you file married and jointly, because it's not going off of your individual income, it's going off of your income that you put down together. Okay, super important. You'll turn that in, and then you'll get a decision letter that will either say we were able to reduce your surcharge, maybe you were at this second tier and you're going down to the first, or remove it if you were in the first tier and then you're coming down into nothing. Now, if they can't, so let's say you didn't have this life-changing event, which I've seen a ton of people. I used to give out denial letters basically left and right, saying that we couldn't evaluate this form because you didn't meet one of the two criteria, which would have been the life-changing event. So sometimes people will put in here, oh, I sold a property, that was the surge in income, but I'm still working my normal job. I'm still making, X amount of dollars, which would put me over the threshold. If you don't have the life-changing event, you're going to get the letter saying, basically, we couldn't consider your form because you didn't meet all of the criteria. If you don't put in your Social Security number, you might get a rejection letter saying you didn't complete the form properly. If you didn't select, maybe you did have one of these events, but you didn't select it, and instead you provided like an employer letter. Whoever's reviewing your form, they might turn it back and say, well, you didn't, I see your employer letter, but, I can't fill in the form for you. So you got to fill it out again. Or some people, they'll do this, right? They'll put whatever the income was here, and then they won't tell us anything else. So that, again, that would be an incomplete form, and that will get rejected as well. So in essence, again, you're going to put your name, your Social Security number, the event that's reducing your income, when it happened, what the new income is going to be for the upcoming year and maybe the current year. The reason why I was asking, kind of in step 2, it's probably asking about the current year, is because essentially Social Security is going to be at least a year behind. That's part of the reason why they look at your income from 2 years ago. The first reason is because they allow the IRS 1 full year to kind of, especially with the pandemic, 1 full year to kind of get all the information over to them. I want to say it's only like twice a year where the IRS sends that information. So once they get everybody's returns done and things like that, then that information, Social Security has to wait to be transmitted. So it's usually at the beginning of the year to adjust your monthly benefits for your tax returns. So if you worked the year before and your income was going to raise your benefit, that's why they review it. To my knowledge, that's why they review it at the beginning of the year, sometime at the between the end of the first and the beginning of the second quarter. So then you get a letter saying we're going to increase your monthly benefit because of your work last year if you made enough money. And then at the last part of the year is for reasons like this about what's coming up in the future, how your benefits changing in that regard. All right. If you enjoyed today's video, please make sure to give it a like. If you have any questions or there was something you wanted me to cover that maybe I skimmed over, go ahead and leave a comment down below. And please make sure to subscribe and turn on your bell notifications so you know whenever I'm coming out with a new video. Thank you so much, and I hope this helped.